Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Okay, we got the chart of spot gold here, price in US dollars. That's the daily. I want to share with you some thoughts. No guarantee, absolutely no guarantee for what I'm going to say, but just some thoughts on the long-term potential for a possible rally, given what we are seeing around distraction of the monetary system on the horizon. So what we are potentially looking at is enormous fifth wave up. Now I'm going to put it in context in using a wave card for a 100-year chart of gold. Again, no guarantee whatsoever. I presented some versions of this in the past, but right now I want to explore this idea with you. Remember, this 100-year chart going back actually not from yesterday, a bit further back, but you can see the movement, and I'm taking this as 1-2. Okay, that's when the gold price was fixed, so that's my 1-2. But the very big bear market that we experienced for 20 years here is not taken as a 3-4, but as another 1-2, and that opens the gate to treat the rally from the bottom of 2001 or so, in fact, as a third wave. Now obviously this is log scale, yeah, this is log scale, and top registered here to 2011, I think, is the end of the third wave, and ever since we have experienced a fourth wave. The only thing that is a little bit, I would say, lacking credibility in terms of proportion is that the fourth wave, if it is about to end or it ended already, it is showing much shorter time period that passed in a corrective phase when you compare it to the second wave. And normally a fourth wave should be actually longer lasting in terms of the corrective phase than what you witness in a 1-2. Okay, 1-2. That's the only drawback that I see in terms of just straightforward proportion analysis. But suppose we tolerate that, because you never know, even if we just experience here a fourth wave that relates to some of the moves that came up. What is clear to me is that we are going to blast above this level. How far high, I don't know. I don't know how far high it's going to run, but it seems to me clear that it's going to blast above this, if you like, double, triple, quadruple top that it registered here in the last 12-13 years. So let's have a look. And this is the daily, okay, going back to the low that I assume was a second wave ending here or here. We can sit and debate for hours on that, and that is a third wave, if that's correct. Third wave ended here. So straightforward, this is an A, that's an A, B, C, B. Now instead of an A, B, C like that, you will basically go with this being A, B, C, D, E, and in fact the fourth wave ended here. in 2022, you see, in September 2022. And since then, we have experienced 1-2, and it's correcting. And of course, some of you might say, hey, wait a minute, the fourth wave could still be ongoing. Yes, that is a possibility. But I would suggest that we go with that because there was a spike here. If you remember in the recent rally when it topped here in May, it actually excelled above these levels. So it's more appropriate to say that we have already broken out to the upside in an impulse wave. And that's the way I would treat it at this point. I think that a major corrective move ended here, and we are now in an impulse wave, of which we have seen wave 1. Okay, that is my working assumption. I think now this is corrective, and my analysis does not call for a break under 1614. No, I think it is, if that happens, it's going to call for complete reassessment of this wave count, long term, short term, whatever you want. It seems to me that if we do go down further to complete this second wave, in an ABC structure, we are probably going to find that there is solid support at around 1800, maybe 1760, and this zone. Once we settle, once this correction is over, I think there's a fair chance we're going to see it going on meteoric rise. Yes, it's going to be absolutely breathtaking stuff going up in the third wave. Whether you accept the idea that we are in a fourth wave on this scale or not, I think that it is heading higher, substantially higher. Now let's go and see the 60 minutes. On the 60-minute scale, we are seeing basically gold losing ground, drifting lower. It broke head and shoulders here. Yes, you can see that clearly. Shoulder, head, shoulder, it broke. It was not able to come back. This is looking like a small scale fourth wave. It's probably in the business of tracing 1, 2, 3, 4. It's going down further. There are quite a few options for the short term right here, and I won't dwell on that for too long. It seems to me, because it's not very clear, you could take this as 1, 2, you could take this as an A, B, or even it's not impossible to treat this as B, like what happened in silver. I think the key is to look at the next target. Where is it heading? Because the wave count here is not ultra clear, at least to me. Where is it heading? It seems to me it's heading at least there. It's heading at least there. That's 1895. And I think that to look like a pattern that is complete, it has to dip under 1895. And then we will see how far it's going. If it's going to the other side of this channel to hit the support that we've got here, we go to 1825, 1830. Okay, and I already shared with you that cycles are pointing to a low in late August. So we could see it drifting quite a bit now. And if we hit the bottom right here, and we have everything sort of falling into place with all the correlated markets, we could be ready for a takeoff. Okay, that is my working assumption at this point. Now here's the chart of silver. That's the weekly. Let's just look again. Let's just look again at the idea of a 100-year chart, and this is silver this time. And that is taken as 1, 2 run up here. I assumed in previous versions of that I presented that could be a 3, 4, and maybe 5 ending here, or that that is going to extend the fifth. With this being 1, 2, 3, and this is working on a tiny fourth wave. Do you see? Tiny fourth wave that relates to the 1, 2 here, and then we are going higher in that fifth leg. Now, of course, you don't lose sight of the fact that this is log. Yeah, This is log scale, obviously. So I repeat, 1, 2, 3, 4, 1, 2, 3, 4. Yes, this is viable, and it will top above the level registered here once it finishes the fourth wave. Alternatively, if we run with the wave count that I presented in gold, if you remember, in the case of gold, we took this as 1, 2, 1, 2. Then we could fit a 5-wave rally here as a third wave, as you can see in red. Yeah. So we're talking about a 1, 2, 3, 4. Yes, we're talking about 1, 2, 3, 4, 5. But that's not the end of the entire rally that we began way back more than 100 years ago. So this is also interesting. And either way you slice it, it seems like silver is getting ready for an absolute blast. An absolute blast. Okay, here's the long term with a 1, 2, 3, fourth wave. May have ended here, may have ended here. If it ended here, it'll sit nicely with the interpretation that we have in the case of gold. Okay, but if it ended here, it might be actually ahead of gold in terms of the impulse wave, because that could be already a 1, 2, and we scored a tiny 1 here, and we are coming to correct right here the second wave, and when it turns up, it could be a 3 of 3, an absolute rocket. It's going to fly above this level. Okay. Again, either way, even if you go with the idea that in fact the fourth wave is not done, which is not to be excluded, I don't like it very much, because as I told you in the case of gold, it did excel previous highs. Silver evidently is weaker currently, but silver will catch up. I'm not worried about that. Maybe silver is still working on the fourth wave, but where is it going to go? It's not going to break 17.5. I would be shocked if it's going to break 17.5. I think 20 is already a lot in terms of the downdraft that we are witnessing. It's going to go to 20. It's an absolute bargain. You have solid support at 20. Look what's happening here. This is long term. This is long-term support right here, support resistance. Okay, so that's the big picture. And from this level, I think the sky is the limit. Silver will take off, and I don't need to tell you what's happening with the fiat currencies and what's happening with inflation. You don't see the real figures of inflation. Everything is doctored nowadays. Inflation is running far higher than you ever hear in the news. Okay, so we had this as a possible 1 ABC. That's another one. Okay, that is setting up the stage for rocket silver to take off once this correction is over. Okay, 1, 2, 3, 4, 5. That's an A, that's a B, and you can see it's coming down. I told you when it was around here, it's not ready to take off. Cycles are pointing to another checkup, if you like, of support, and it's not ready, and it turned down sharply, which tells us yes, the cycles, the reading of those cycles is correct. So let's just continue with that. Okay, when it works, you don't want to interfere with something that seems to be on the right track. And I think we had an AB, and we're going down in a C. Of that C, we possibly have seen 1, 2. We still have these bits and pieces, you can see. That'll take it towards 22. Dipping lower towards 21. Yes, going as far as 20 will call for reassessment of the wave count, but will not turn silver bearish. Okay, will not turn silver bearish. I do not expect at this point 22, 21.5 to break. Okay, I think it is going to find support here, but if I'm wrong and it breaks to 20.5, 20, I am reasonably certain it's going to turn up. It's going to get the support that it needs to come back, and come back in a hurry. This is a channel, might help you to look at proportions in play here. So that's where we are going, I would say, in the next 2 weeks, maybe slightly longer. And we'll see how it behaves once it comes down here, takes the stops. We'll see how it behaves. If it spikes down and bounces back and it sits on 22, it sits on 22 and it's sort of looking stable. Fair chance it may have scored a bottom and it could be ready to come back up strong. Website, the home page is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the home page. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you, you should read that, it explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you're not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.